Hey, what is going on? I'm here to talk about the markets and what's going to go on with the markets, and we're going to be taking an objective look. I'm just going to lay out facts for the meantime, and then towards the end of the video, probably at the end, I'll give my opinion on what things will do, what'll happen. But anyways, let's start. So the first thing I want to point out are the 10-year yields, the bond markets, all that kind of stuff. These are very important because they measure how people are feeling. So when bond yields are low, that means demands for bonds are high and people are risk adverse. That means people don't want to have their money in general markets. They're scared, and they are likely to, prices are likely to come down. So what we see here is rejection of the top trend line, the downtrend line. We haven't broken that. We have this two candles here, both showing downwards pressure. And I think that, this is potentially going to go lower. This is not a good thing. This is a bad sign for stocks in general. If we take a look on the monthly, we can see that there is arguably a bearish divergence on typical RSI things, and so this could potentially go down further. This is the 10-year yield. Taking a look at the 30-year yield does not look very nice either. On the weekly, we have, again, this previous trend line. It looks to have rejected at this point, and I think the follow-through will be downwards as well. Once again, not a good sign for the markets. When the yields go down, that means people are risk adverse. They don't want to hold stocks, and they want as many safe return items as they can, and so they'll flock to bonds, and we'll probably see these fall lower. This last weekly candle was not very pretty. Take a look at the indexes. E-mini futures, quite a nasty week. See here we have a strong engulfing candle. It's possible that we bounce again. We don't know, but objectively speaking, this is a very strong warning candle. I would likely see it come down to here, which is the previous zone, the previous all-time high. And given the way that the bonds are structured and the 10-year yield is structured, I would likely see this coming down lower. You want to take a look at the monthly. Let's get rid of that. We can see that we have a big doji candle. This is not a good sign. This is always a warning sign. We had a similar warning sign here. Again, followed through with downwards selling pressure. Here you could say we had another doji. Not exactly, it's not a be-all end-all sign, but it's definitely something to watch out for. Once again, over here, similar stuff. If we look at the RSI divergences, we see that these are present as well. We have higher highs and lower highs. Once again, I would like to see this, touch the 50 line again before buying. Maybe, we see it go back even lower. Again, that's not a given. We look at the NASDAQ, same sort of story. Nasty candle on the top. The daily, not as bad, but it's not much better. This could, turn into a head and shoulders where we see this go down and break down further. Again, all possible. The Dow Jones, we saw the biggest one-day drop I've seen in a very long time. The last one was probably the COVID crashes and ages ago, back in 87 and shit. This is, again, a 2.5% drop, which is a lot. We'll see what this does. Again, if you look at the weekly, this is not a good sign. It's cracked the previous level, so it's gone below this, so that means we can expect it to go lower. If we look at the monthly, similar sort of divergences all along everywhere. Again, not ideal, but if we want to buy, we want to wait till this goes lower. Now, so indexes don't look great. We'll take a look at the IWM, which is the Russell. This is also very important. Look at the weekly. We had this massive range right here. We failed the breakout. We did not see upwards continuation, and I would expect this to break down. This is not ideal. We have a support, I guess you could say here, but again, not the nicest chart either. So we'll take a look at the volatility, and then I'm going to go through a couple stocks and we'll close it off. If we look at the VIX, we saw this massive gap up. The last time there was a gap this big right here was when the COVID market went flying. So, I would expect volatility to come through, and we'll see what happens. I would see this going up again. This is not a good thing. We don't want it to go up. It's bad when it goes up because that means other stuff is likely going down. So we'll take a look at the biggest companies. Apple, Microsoft, Google, Amazon, Tesla. Tech has been leading the market, so we're going to have to stick with tech. We can take a look at some other stuff. And so I just want to point out what's going on here. And we see Apple. If we look here, we have a rising, ascending wedge pattern. This is not good. These typically break bearish. And if this cracks that lower line, it's not going to be looking nice. If we look at the weekly, again, we see this rejection of the upper trend line. I would not be surprised if prices go further down because once again, there is a huge RSI divergence. I'll be waiting to buy at the 30 level, probably around, 30. Amazon, same thing. We have a lot of lines here. I'm going to get rid of them real quick. What we see here is, again, another rejection of that upper range. Amazon really wanted to break out and go up, but unfortunately, the way I see it, it's going down. Again, we see these RSI divergences, so, not the be-all, end-all, but it's not looking ideal either. Take a look at Google. Google on the daily just broke out of an ascending wedge to the downside. This last day is not pretty. We did not bounce off of the previous highs over here. And so, again, I would expect this to keep falling down. Microsoft is probably the best looking out of all of these, but this candle is quite nasty. It's probably bigger than most of them, and it'll definitely be followed by some selling similar to these. Nvidia, again, it's just, this thing went up to the moon. It has to come down. This might be the top. AMD, same thing. They're all looking hugely overextended. Tesla, same thing. Visa is very important. You'd think they'd be a huge company. They are a huge company. And they have been absolutely terrible. It looks like they've already crashed, almost. We have not seen any buying from anywhere. If anything, this would be the point where we might see Visa, bounce up higher. Visa is something that I would be thinking about. We can take a look at JP Morgan, the banking sector. The banking sector, again, rolling off. This does not look ideal. Big kind of volatility this week. I don't really see it pushing up higher. It might, but we'll see what happens. XLE, the energy ETF, does not look great. We have this previous support. We did break out, but we didn't see a followed through bounce, and so we're seeing likely a continued sell-off. This last weekly candle is not pretty either. Financials, same sort of thing, it's just too overextended. We had the RSI divergence. It actually played out. We've already seen it play out. And, we'll probably see it come down further. I'm not sure where, to what extent. but that's definitely in the cards. Last couple of things I want to talk about are Bitcoin. Bitcoin looks like it has rejected this new all-time high zone. Again, typical RSI divergence, with the upper higher ties. Not looking great either. For something that's supposed to be the new gold, it's not, holding too strong. And gold is the one thing that is kind of worrying, because should gold crash further, that's not a good sign for the markets either, because typically gold will crash before the market crashes. That's why I want to close it off with the 10-year yields. These are going to dictate the movement of the markets, period, because the bond market is way bigger than the stock market. It's probably the biggest market there is. People say Forex is bigger. Forex is pretty big, but we're just trading currencies. We're trading the let's put it as the we're betting on countries, essentially. We're trading on how reliable is this country's debt. We're buying their debt. So if this goes down, that's not a good thing. And the way I see it, it's looking like as such. Personally, I think the top of the market may be in, and I'd be excited to see what happens. Personally, I hope that it's not, because it's never a good thing that the markets crash, as we say. But I do think that it's very likely that we see a extended sell-off, probably of potentially larger magnitude than this, because this up move was just so big. So the down move must be of moderate magnitude. So yeah, I'm going to close it off at that. I hope everyone has a good weekend, and leave a comment. I'll probably make an update next week.